Now referring to you, my dear, foreign trade policy applicable for our September 25 exam of CA final rapid revision, where the entire foreign trade policy deals with A minus B greater than 0. One line, A minus B greater than 0. A is our export, B is our import. Our export should be higher than the import. Then we wind up with the positive net foreign exchange earnings. The main object to mobilize the foreign exchange, the ways and means through which, without violating international trade practices, we have to mobilize the funds. That is what we make in India. Make in India, local to global concept. So in this process, this fund is easy of doing business. The exporters, incentives are there. The export process is simplified. And exports not required to pay any duty. Audit we suffered, we'll give back in the name of withdrawback, in the name of refund. This is what we referred under GST law. Section 54, export under LUT without payment of GST. This is also one of the export incentive under FTP. Get my point, sir? So, entire FTP, my dear, is rotate within this particular export incentives to promote one called as duty exemption scheme, one advance authorization scheme, second one duty free import authorization scheme, DIFA. DFIA, duty free import authorization, DFIA. One is AA, advance authorization or duty free import authorization, DFIA. These two are duty exemption schemes. Further, we have duty remission scheme, where duty drawback scheme, remission of duties on exported products scheme. Further, EPCG scheme, export promotion capital goods scheme. Further, EOU schemes, export oriented schemes, ESTP, electronic hardware technology parks, FTP, software technology parks, BTP, biotechnology parks, deemed exports concept. This point I referred section 147, where I referred this the export refund category under GST law. Deemed exports, I will explain to you. And finally, SEZ schemes. Strictly speaks, SEZ scheme not covered under FTP. Where it covers, it has separate SEZ Act. Provisions relating to special economic zone are contained in a separate act, SEZ Act, and are not part of FTP. However, provisions of SEZ are closely related to foreign policy, which we cannot able to ignore. Reason, SEZ's separate SEZ Act covering under the Ministry of Finance, whereas FTP comes under category of this foreign policy under the Direction of Foreign Trade, where it comes under the particular Ministry of Commerce and Industry. Under that ministry, FTP comes. If you refer here, especially my dear sir, if you refer the foreign policy, it comes under the Foreign Trade Development Regulation Act. Foreign Trade Development and Regulation Act, which is under the supervision of Union Ministry of Commerce and Industry. Union Ministry of Commerce and Industry. SCAT comes under the Union Ministry of Finance. Under this particular Foreign Trade Development Regulation Act, like a CBIC, under the Indirect Tax Laws for the foreign policy, we have a separate organ called as DGFT, Director General, DGFT, Director General of Foreign Trade. It is provide from time to time promotional schemes, how to motivate the exporter to export to earn the foreign currency. So in this process, we have the following schemes. My dear sir, we are now here. If I reach to this place, FTP will complete. You get my point? Duty exemption scheme, where advance authorization scheme. Why it is advance? What is authorization? Authorization means permission, which is given in advance. What you mean this? You take duty drawback, which is coming under the duty remission scheme. Here duty drawback also for exporter, advance authorization for also for exporter. What makes difference? Pre-export benefit and post-export benefit. I export the goods after manufacture. On account of export, I am asking duty drawback. What duty? The duty paid by me before export, the tax paid by me before export. Means when I procure raw material, I paid import duty. Locally I purchase, I pay the GST. These goods are manufactured, I exported. Already I suffer the duty on imports. On that inputs duty suffered by me, I can ask for drawback when I export the goods. Then what's the exact difference between the refund and duty drawback? Refund is exactly what I suffered I can get back. Duty drawback is exactly what I paid I can get back. Less than that only. Less than that only I will get on account of my export. Now assume a scenario, Baba. I import the raw material 100 lakhs. Custom duty comes 40 lakhs. I paid. I import the goods. I manufacture finished goods. I export it back. Duty paid by me how much? 40 lakhs. I export the goods. Then I am eligible to qualify for duty drawback. I am claiming duty drawback 28 lakhs. I suffered how much? 40 lakhs, but I am getting how much? 28 lakhs. Here what happened? This 28 lakh rupees is incentive for me. That means 28 lakh rupees duty not required to pay. But I already paid import on import. My amount of 28 lakh rupees valuable money held in the name of duty in the hands of department. When I paid 40 lakhs, which includes 28 lakhs. On account of export tomorrow, I am getting back how much? 28 lakhs. If the department given that 28 lakh rupees to me at the time of import itself, saying that anyhow you are manufacturing exporting, therefore you please pay 40 lakhs minus 28 lakhs, only 12 lakhs, not required to pay 28 lakhs. If the department says that 28 lakh rupees in my hands, I can effectively use my production purpose. Furthermore, I can produce the product. I don't want to run behind the banker for the want of working capital. Get my point, sir? Duty drawback is an incentive post-export. Is clear? I want that benefit pre-export. Then, in that thinking thought, from that thinking thought, advance authorization scheme has been emerged. Resultantly, if we import the goods, no BCD, no IGST, no duty, import freely, means duty liable to pay but not able to pay. But with the conditions, satisfy, export the goods. You are satisfy the export, then your obligation of export redeemed. The benefit already obtained at the time of import. Get my point, sir? That is called what? Advance authorization. Then how this DFIA differ from advance authorization? DFIA like a post-export benefit. Post-export benefit. Now I am explaining advance authorization followed by duty-free import authorization, which is one of the important content. Major portion it is. Remaining are easy. If you understand this and this sufficient, the balance just like you can understand. Now I am referring duty exemption scheme. Here advance authorization. Meaning it is in advance not required to pay on account of import of raw material. Validity, import of goods under advance authorization must be made within 12 months from the date of issue of authorization. Revalidation for another period of 12 months extension will be there, allowed only once. For supply under deemed export, contract duration on the project, whatever may be, that means validity period of license 12 months. Further 12 months can be extended. For what? Import of goods. Once import the goods taken place, 90 days from the date of clearance of import consignment, you have to manufacture and fulfill export obligation. When you fulfill export obligation, time period to export within 90 days from the date of import and no extension. When you export with value addition. Meaning what? A minus B greater than 0. Our export more than our import. Then only benefit. If A minus B not greater than 0, you cannot get the benefit. I import Raja 5 lakh rupees worth of the raw material. After manufacture, export the goods worth is only 2 lakhs. Negative impact. Not A minus B greater than 0. No incentive. Then what is the value addition? Minimum value addition here given as like this 15%. Meaning what? My CIF value import 100 lakhs. Then I should export 115 lakhs minimum. Get my points? Then come back. We do have here this particular scheme carries the actual user condition. What do you mean by actual user condition? I will tell you. Look here. Look here. I import the goods in India from USA. What's my CF value of import? Let us say 100 lakhs. A, B, C, D material imported. I manufacture the goods and exported. On export, what is the minimum value addition? 15%. My CF value of import 100 lakhs. Now, my FOB value of exports must be minimum 115 lakhs. Then 115 lakhs. Very good. Then all the product A, B, C, D, what I imported without payment of import duty, which has the export obligation, means under the charge. These A, B, C, D raw material I should not permit to sell in India because I promised to department I am going to import without payment of duty. Please permit me, and I manufacture and export. All the raw material should be there in finished product P. It should be there. A, B, C, D should be there. You get my point, sir? Then export the goods. Suppose any one of the raw material I have not manufactured, but I attached along with the finished product of exported goods. In that case, such value of CF value of import should not exceed 10% of the overall import. Now, product C, not manufactured, export as such along with the finished product, because product C itself is a finished product. I import bumper rod. You get my point, sir? Bumper add is a finished product. If I further manufactured, it become a raw material again. So such a material imported is itself finished product, part of the final product, which is attached and exporting as such. In that case, such CF value of import should not exceed 10% of the total value of CF value. Total value CF value how much? 100 lakhs. On which 10% is equal to how much? 10 lakhs. 10 lakhs. The value of import, which is C, product C, is how much? 2 lakhs. The 2 lakhs I export it as such, not exceeding 10 lakhs. Then I have satisfied actual user condition. Get my point, sir? Any difficulty? Time limit to import from the authorization 12 months. Further can be extended to 12 months. I have to manufacture and export within 90 days. When I export back, the export obligation minimum 15%. Is it clear, Baba? Any difficulty? If the goods supplied to foreign embassies in India or deemed exports or goods supplied to outside India, all are can be considered as redemption of export obligation. I don't want to export outside India. I can supply to a particular SAD unit in India. I can supply to deemed exporter. I am a deemed exporter. I have advance authorization. I import the goods. I supply the goods to exporter. Get my point, sir? It's called deemed export. It's called redemption of export obligation. Supplies made to the particular SAD unit also export. Export obligation redeemed, provided the valuation should be 15%. Payment should be realized whenever supplied to SEZ units. Payment should be realized in the foreign currency. In the foreign currency, then it is redemption of export obligation. That means simple, sir. Import the goods without payment of import duty. Manufacture the goods, export the goods, redeem the export obligation. Then the benefit of export already obtained. Don't ask for drawback. Do drawback eligible? No, because I have the benefit at the time of import. Is clear? Is what? In nutshell, advance authorization. When we talk about the duty-free import authorization, where you have to export the goods. Now, sir, I import the goods, sir. Pay import duty. Pay import duty, BCD, IGST, whatever pay duty. After importation, I have manufactured finished goods strictly by following SIAN, standard input output norms, meaning one condenser, if I use, one PV will come. Two integrated circuits, if I use, one TV will come. Standard. One condenser, two ICs is equal to one output. In and out is prefixed in SIAN. That port only I imported. I paid the duty. BCD I paid, let us say 20 lakhs. IGST paid, let us say 28 lakhs. BCD how much I paid? 20 lakhs. IGST I paid 28 lakhs. I import the goods. That goods I manufacture. Cover under the SIAN. Is clear? And I export that goods with a value addition 20%. When I import the goods, 100 lakhs worth imported. When I export the goods, I export 120 lakhs minimum. How much value addition? 20%. Value addition is 20%. I export. Now, I want DFIA benefit. Duty free import authorization after export. Department says it is the benefit DFIA equivalent to BCD what you suffered. I suffered BCD how much? 20 lakhs worth of the DFIA will be granted to me, provided for which I have made application. I have to make application. Export shall be completed within 12 months from the date of online filing of application for and generation of file number. Regional authority will issue DFIA within a valid period of 12 months from the date of issue. You get my point, sir? Exporter should complete within 12 months of export, within 12 months from the date of online application export. I am going to export, I want DFIA. Now I submit the application. From the date of submission of application, within 12 months I exported. Then the department, regional authority, granting to me DFIA, having a license of a 12 months time period. Now, that license 12 months, value how much? 20 lakhs equal to BCD. Tomorrow, within 12 months, if I am going to import the goods, there I am not liable to pay BCD up to rupees 20 lakhs. If I am not able to import, I can transfer to somebody else. Is it, after all, a particular instrument? I can supply to others. Get my points? I can sell to others. Others will purchase by discounting. 20 lakhs hota. Can you sell 15 lakhs? Sir, very lesser, sir. Okay, 18 lakhs sold. So I encash the payment of 18 lakhs. How long is valid? 12 months. You get my point, sir? So like that, DFIA runs, which is called as a post-export benefit, which is not going to carry actual user condition. It is sufficient to meet the standard input-output norms. Is clear as further. Coming to the given scheme. Here we understand the advance authorization scheme. Other one is duty free. In advance authorization, we have annual advance authorization, AAA. Annual I can get. Having the previous year export performance, FOB value previous year into how much percentage the FOB value here means almost 300%. It is now 300%. Here, look here. In the given case, here I want to go AAA is what? Annual advance authorization. Previously I have been exported FOB, let us say 150 lakhs multiplied by 300%, namely 3 times is nothing but how much? 450 lakh or rupees 100 lakhs. 100 lakhs, namely 1 crore. Whichever is higher is a 450 lakhs, 4.5 crores. 4.5 crores worth of the license I can have if I have going on import duty going on reduced from 4 crore 50 lakhs. One customer imported where the duty is 50 lakhs reduced, balance for 4 crores. Again I import the goods. Throughout the financial year, every time when I import, not required to apply advance authorization till exhaust that entire value, I can able to going and import with the payment of import duty. It's called what? Annual advance authorization. FOB value of export of the previous period multiplied by 300% compared with rupees 1 crore, whichever is higher. After that of duty without payment, I can import the goods in a financial year. Is clear, sir? Now coming to duty drawback scheme. Sir, duty drawback scheme section 75 of the customs refers, where we have duty drawback for export, duty drawback for export, provided I should not claim advance authorization, I should not be referred the DFIA. Then is an alternative schemes, which is academically go ahead. Alternative schemes, somebody will purchase the Apple laptop, somebody will purchase the Samsung laptop, somebody will purchase the Lenovo laptop, depends upon the availability and the fund. So like that here also the exporter is comfortable with the duty drawback. In that case, duty drawback is the amount going to be credited to the bank account of the exporter. When I export the goods, duty drawback can claim, not required to wait till the payment realization. Get my point, sir? If I got the payment in the bank account, I can use directly for my further purchase of the goods or my working capital requirement purpose. Such a duty drawback scheme is cashback offer. Cashback offers. Here we have the all industry duty drawback rate. Like that, we do have brand rate, special brand rate. The minimum duty drawback is 1% on FOB value of export. The maximum duty drawback here is 33% on FOB value of export. But duty drawback is not allowed if you act fraudulently. What do you mean that, sir? Sir, fraud, I will tell you. The value of the goods exported, Emma, the value of the goods exported is 5 lakhs. Duty drawback I am claiming 6 lakhs. Yanda Pavi. Export of goods how much? 5 lakhs. 5 lakhs worth of the goods only you are exporting. How dare you claim duty drawback more than the value of the goods? Fraud, na? That is not allowed. Otherwise, allowed. How much minimum? 1% FOB. Maximum 33% of the FOB value of the export. Get my point, sir? Remission of duties and taxes on export product. Need to understand. A new scheme it is. Remission of duties and taxes. If you refer here, this particular scheme. Now, remission of duties taxes. Here is there, na? Is there. Duty drawback schemes is there. There are, as I told you, RDT drawback rate is there. Thereafter, what is there? Brand rate is there. Thereafter, special brand rate is there. Special brand rate also is there. You get my point, sir? On the other hand, remission of duties and taxes on export product. What do you mean this? This one, are you aware of that? It is refund chapter. See, FOB value of export are 1.5 times of the price cleared the goods, whichever is less. Qualify for numerator? No. In 54, rule number 4 of the CGST rules. It is the problem, Sama. That one incentive already covered. This one, this remission of duties and tax export product, which I am presenting here. Remission of duties and taxes on export product is a combination of central taxes, state taxes. Earlier, on account of export, you eligible to get only central tax as a refund. Under the benefit MEIS, Merchandise Export from India scheme. Now, which is replaced as a remission of duties and taxes on export product. What the benefit RODTP, which consisting of not only central taxes but also state taxes. Earlier, what is not covered for incentive, now covering here. Is clear, sir? Here, the important point to understand here. Here, I will bring to a notice remission of duties and taxes is a very important. One can expect in the examination, my dear sir. I am bringing notice this one, yeah. ROD scheme. Under the scheme, there is a numeric example I would like to bring here. Hopefully, you are able to catch all this. Here, what is the content? We refer. Employment oriented sector like marine, agriculture, leather, gem and all are covered under this scheme. Other sector like automobile, plastic, electronic machines get support. The entire value chain textile get okay. This is what the textile nature one. Then the under the scheme of RODPP scheme, you see duty credit scheme here is there, na? Here itself is there. Duty credit script as a percentage on what? FOB value of exported product or 1.5 times of the market price of the product, whichever is less. To that extent, amount will be given to you as a duty credit scrip. It has a validity. One example I am bringing here. During the year 2026, S Private Limited has made export safe valves coming under the chapter country of export USA UK. FOB value of export free foreign exchange 50 crores. Market price of the exported free foreign exchange 30 crores. As per Appendix 3B, the final policy rewards of export scheme is 3%. Find the duty credit scrip under the RODTP, Remission of Duties and Tax Export Product scheme, which is available to estimated. Now, what is the provision here? We understood FOB value of exported product compare with market price of the whichever is less. So here market price how much? 30 into 1.5 times is equal to 45 crore. Then compare with the FOB value 50, which is less. So 45 crore on which 3% reward scheme is equal to how much? 1.35 crores worth of the reward will be given to you. Having this, what I can use, sir? Sir, this RODP scheme if you have, you can import the goods where not required to pay import duty up to 1.35 crores, or if you are not able to utilize that with the given period of time, it has validity for 24 months. From date of issue, 24 months. It has validity. How long utilize means it can be used for a period of 24 months from date of issue of this one. Get my point, sir? So here 1.35 crores worth of the duty not equal to pay against BCD. You cannot use the RODTP against IGST. You have to pay IGST because IGST wants to pay, that can be routed through input escalate to you through GST at 2B. Who will do, sir? Department of Customs will permit you to avail the ITC. Get my point? Yes. So it is a validity of a 24 months format of duty credit scrip. If you are not able to utilize, sell to others, encash the payment. The credit, okay, is clear? Any difficulty? Duty remission scheme. In that duty remission scheme, remission of duties and taxes on export product, duties credit scrip percentage will apply on what value? FOB value of export or 1.5 times of market value of export, whichever is less. On that apply the given percentage. These percentages the examiner will provide in the examination. This is drawn from the ITC, Indian Trade Classification. There we have ITC, a particular HSN. This is very important one, sir. ITC, HS, Schedule 1, Schedule 2. There the percentage of rewards are mentioned country wise, which that fellow exam will provide to us. Just we have to apply on that an appropriate amount. So with this, if you refer here, in the given case of export incentives, in the case of export incentives, we covered maximum areas here. What are the things we covered, sir? We covered advance authorization, we covered duty free import authorization, we covered duty drawback, we covered RODP. Now coming to EPCG, very simple. Advance authorization for inputs, EPC for capital goods, but only export obligation differs. You get my point, sir? In case of EPCG scheme, if you bring here, I will straight away take into your material EPCG scheme. Very, very simple. I drafted here. If you concentrate on this, you understand. It is also pre-export benefit. Pre-export benefit with regard to capital goods. Now, X Limited got a license from where? DGFT. What license? EPCG license. To permit to import the goods, capital goods, without payment of import duty. If we got license, is a valid for a period of 24 months. Within 24 months, you have to import the capital goods. I imported, sir. By not paying duty, how much? 20 lakhs. 20 lakhs not paid means this much duty saved. Is clear? That capital goods I installed in my factory, which is under actual user condition, because without payment of duty, I promise to department using the capital goods, I will produce the finished goods and export. I will redeem export obligation. Within what period of time means within a period of 6 years, I have to manufacture the finished goods and export the finished goods by satisfying my export obligation. There are two. One is average export obligation, other one is specific export obligation. Average export obligation says that my average exports in the preceding 3 licensing years, licensing year means 3 financial years, for the same and similar product, how much? Sir, year 1, year 2, year 3, year 1, year 2, year 3, here 40 lakhs, here 50 lakhs, 80 lakhs, total how much? 170 lakhs for 3 years, average per year how much comes? 170 by 3, here 56 lakhs, 7 lakhs is export average export obligation. In the previous year, 3 years. Then I to fulfill specific export obligation. By using the finished goods, I have to produce. With the using the capital goods, I have to produce the finished goods. 6 times of duty saved. How much duty saved? 20 lakhs. 6 times equal to 120 lakhs. 120 lakhs or 56, which is higher, 120 lakhs. That much of export of finished goods, FOB value of 120 lakhs, I have to export within a period of 6 years from the date of authorization. Be careful. Not from the import. Authorization is granted. Within 24 hours, you have to import. Then, within 6 years from authorization, you manufactured using that capital goods, export. While exporting, fulfill export obligation. There are 2 export obligations. Average export obligation, you have to satisfy. Specific export obligations satisfy. Specific export obligation 120 lakhs. Average export obligation 67, which is here 120 lakhs. If I export 120 lakhs, automatically satisfied average export obligation also. In that case, over a period of 6 years, I have to export FOB value how much? 120 lakhs. Then my export obligation redeemed. In that case, that capital goods which I have with me, can I sell in India? Yes. After redeeming export obligation. Till the time, the capital goods should not be touched for sale. Only used for manufacture. Is clear? Sir, if I locally purchase capital goods, then the supplier who supplies the capital goods to you is called deemed exporter. Will attach the duty. GST will attach. But here, if you have import the capital goods, what duty is supposed to pay? That much of duty you are not required to pay. But you are not importing also. Locally, if you purchase, get my point, sir? Locally purchased capital goods are there with you. Then that capital goods you are using for manufacturing, exporting the goods, then you are eligible for particular EPC scheme. Sir, I pay the duty, no sir, no problem. When you purchase the goods locally, how much you purchase? So much value. How much I just paid? Assume I just paid locally, I paid 20 lakhs. For example, Raja, 20 lakhs. That 20 lakhs, you being a holder of EPCG, suffer the tax, you can ask for refund. Refund allowed to you. If you redeem that refund, then the deemed exporter who supplies the goods to you, he will avail the refund. You get my point, sir? If he availing the refund, then the benefit goes to some person. So that benefit indirectly goes to your supplier. Get my point, sir? In that case, generally what happens practically, my parent company in India, from whom I am buying the goods and charging the GST, which is IGST only, 20 lakhs. I suffered, but my parent company can refund. If not, I myself can claim refund as a buyer. Means duty saved only. How much duty saved? 20 lakhs. That time, instead of a 6 times multiplication, it is only 4.5 times multiplication. 4.5 times only. So 20 lakh multiplied with 4.5 times is nothing but how much? 90 lakhs. If you export 90 lakhs, sufficient. Export obligation is redeemed rather than to export 120 lakhs, because importing from outside India is expensive for you. Get my point, sir? Locally, if you purchase, export obligation reduced. That export obligation, which is 90 lakhs, specific export obligation. Specific export obligation or average export obligation, which is higher? Specific export obligation. That is, if you satisfy other obligation, automatically you satisfy. You get my point, sir? Here, one step ahead further. Suppose when you import the goods or locally purchase, assume I import the goods by saving the duty, how much? 20 lakhs. 6 times of duty saved. I have to export how much? 120 lakhs. Out of 120 lakhs, 75% of 120 lakhs. 75% of 1 lakhs is equal to nothing but what? 90 lakhs. This 90 lakhs worth of the finished goods of effort value export, if I did so within a half of the or less than the half of the total period of 6 years, then within 3 years or less than 3 years, if I export 75% of the total export obligation, then I exported within 2.5 years, 90 lakhs exported. The balance how much is there? 40 lakhs. Not required to export. It is declared as export obligation redeemed. Then the capital goods what you imported can sell to others in India after usage for your production purpose. Now, is a pre-export benefit or post-export benefit? Pre-export benefit. Get my point, sir? It is called what? EPCC scheme. Export Promotion Capital Goods Scheme. Then coming to, see, we covered so many points we covered. What are the points we covered so far here? In the given case, export incentives are considered. The following we completed. One is EPC is also completed. Now left over is what? EOUs, ESTPs, STPs, BTPs. What is this benefit? I will explain. Here also it is there. In a diagrammatic presentation like this, look and understand. Listen, Raja. Exporter EOU, 100% export oriented, or electronic hardware technology park, or BTP or STP, for example, software technology park. If they are all imports into them is free because they are the exporters. If locally supplied 80% to them is called deemed export, liable for IGST. This IGST supplier, if claiming refund, then export this buyer should give writing. I have not claimed ITC. The refund can be claimed by the supplier. Follow the procedure. Otherwise, the buyer who purchased this by paying IGST, they can claim a refund. Either one can claim refund. If import the goods, no GST, no custom duty. Get my point, sir? In that case, I have mentioned here by saying that the here somewhere it is there in the material. Either buyer can claim refund or seller can claim refund. Seller want to claim refund as a deemed exporter. Conditions apply. 1. Seller should get jurisdictional commissioner of buyer location proper officer from whom a certificate. Yes, so and so supplier supply the goods, so and so buyer receive the goods, buyer comes under my reason, and the buyer should writing handwriting. Yes, I purchased the goods by payment of GST. I am not willing to claim ITC. I am not willing to claim refund. The refund can be claimed by my supplier. Get my point, sir? With that conditions, seller can ask for refund, which is a deemed export benefit. Get my point, sir? For a deemed export, the exporters who are himself EOUs. One more benefit, sir. When the goods are imported by EOUs, they can warehouse. They are not required to clear. No time limit of 1 year and all. A number of months they can keep there. Reason, their factory itself is what? A warehouse. Their factory itself a warehouse. If I'm EOU Raja, I import the goods. No import duty. Is clear? After 5 years, I manufacture. I'm exporting. Duty required to pay? No. I got the benefit on account of import itself? Yes. When duty will attack? No. When I clear the goods DTA, EO unit, import the goods, no import duty. Okay, na? After manufacture, selling in India, that time duty has to pay. Is clear, sir? Further, referring here to deemed exporters. Deemed exporters, I refer to you by saying that if the supplier himself here, this for deemed exporter, he can claim a refund. If I supply the goods to EOUs, ESTPs, this is a benefit for him. Further, nothing but what this deemed exporter is facilitating the exporter. Unless he supply the goods, the exporter cannot able to supply. That's why he can get the benefit. Provided this fellow, the exporter, while submitting the shipping bill, should mention the name of the deemed exporter in the shipping bill. Then the deemed export benefit will pass it on to supplier. Is clear? With this, how many points we have covered here? We covered EOUs, deemed exports. Now coming to special economic zone unit, I will tell you by taking into my hands. Special economic zone unit, which one cannot ignore at any circumstances, at any place. Special economic zone units, which we cannot able to ignore under the final policy, though it may not be covered under the final policy. Now listen, is a final touch up. Now X Limited, DTA. DTA means domestic tariff area. Let us say in Chennai. Supplied goods or service. ABC Limited, which is a SEZ unit, MEPS, Madras Export Packing Zone, also in Chennai. This supply is interstate. This supply export. This supply export. Zero rate. If they supplied to Raj Limited, Chennai, is import of goods or service. The importer submit bill of entry. This importer liable to pay BCD plus IGST as a customs duty. Reason, the area of SEZ is treated as separate island within the territory of India. Supply to SEZ, supplies from SEZ is export or import. Now, this SEZ unit, when import the goods, not liable to pay import duty. SEZ units are locally purchased, not liable to pay duty. Duty free zone is clear. That person SEZ export the goods. Are they eligible to claim remission of duties and taxes on exported product duty credit script? Are they eligible to claim? The law permitted to them. Yes, you can claim. So what they can do, their output is not taxable, no sir. So what they can sell that is to others within a period of 24 months validity period, can encash payment as a helping hand to our heroes of exports. SEZ units are none other than heroes for export. Get my point, sir? And they will be treated as a star exporters. Who are they? Star exporters. Who are the star exporters? Namely called as status holders. That question is going to come in the exam. That is going to answer to you now in these simplified lines. Star exporters means like this. One star export house. If their export performance are deemed export performance together for the previous 3 years plus current year, that is previous 3 years plus current year as of today, 11th August 2025. How much export? No average export. Last 3 years plus current year as of today. My exports on accumulated basis, not average basis, on accumulated basis is $3 million and above. You know, 1 million go to 10 lakhs. $3 million and above. Then one star house. If it is $15 million and above, 2 star. If it is $50 million and above, 3 star. If it is $200 million above, 4 star. If it is $800 million and above, with the upper limit, 5 star export houses. For them, red carpet laid down in the customs. Their cargo, if they import, first priority to clear. Clear first, pay next. Meaning what? Duty not equal to pay. Clear first, pay next. Means from 1st of the month to 15th of month, they can pay on 16th of the month duty. For others, the bill of entry returned and the same they have to pay. For the star exporters, pay first, clear first, pay next. Second half of the month by 1st of the next month. What a great benefit it is. Only for the year ending March month, second half of the March month by 31st of March. Is called duty deferment to them. And if they submit for export, or they submit export, or this shipping bill, or they submit bill of entry for import, their assessment will finalize without scrutinizing. Because star exporters, they are the owner of the foreign currency, millions of dollars. They are the real heroes to bring foreign currency to India. Who are none other SEZ units, especially if they have the turnovers or a unit which has turnover, even though not SEZ, for example, $3 million and above for the past 3 years plus current year as of today, then 1 star. $15 million and above is 2 star. $50 million and above, 3 star. $200 million above, 4 star. $800 million and above, 5 star. This star they will get only, hey Mr. CA, chartered accountant, you have to verify their books and certify it. Yes, the export performance made so much by this organization. Having the certification of CA, you apply to DGFT, they will give a star to you. You have a various benefits under the customs law to avail. So, as a whole, I have referred to you by mentioning this particular area. Though SEZ is not come under 500 policy, but we cannot conclude the 500 policy without referring SEZ. With this, the journey on indirect tax laws comprising the GST, customs, FTP as rapid revision for coming exam of September 2025 CA final paper number 5 indirect tax laws officially concluded at this point of time. 7 days we have taken. With your cooperation, encouragement of extending the class up to 6 o'clock, 7 o'clock, 8 o'clock is possible. Get my points? All the best for exams. Thank you to one and all. Thank you, my dear friends. Thank you. Thank you, Amma, to all of you. Thank you to all my online students also who attended by cooperating. See, all my online students also there as from the morning. I'm highly thankful to my online students also, my dear friends. All the best in the exam point of view, and I am going to conduct amendments class on coming Wednesday 10 a.m. to 1 p.m. only 3 hours with diagram manipulation. Separate material will be provided to you, soft copy for that. Absolutely free to all my beloved students. Most welcome, and inform your friends also, make use of them, those who are going for examination. Many of them may not be knows. After that, you not told me no, I would have attended no, that fellow may say. So if opportunity comes, please inform your friends. Absolutely free. Is clear? Thank you, Norinder. Thank you, Amma.